outlook for the U.S. commercial line segment is being revised to stable from negative. The main reason for changing the outlook to stable is the relatively modest negative impact of the COVID-19 pandemic on performance during 2020 and through the first 3 quarters of 2021. We've gained more clarity about the impact of the pandemic and associated issues, leading us to revise the outlook to stable for several commercial lines of business, including workers' comp, commercial property, and surety. Further, with the exception of workers' comp, we continue to see strong pricing momentum across the segment. In addition, the segment has maintained its solid risk-adjusted capital position and continues to generate strong underwriting performance. This includes continuing favorable overall development of prior year loss reserves, albeit with some declining redundancy. And while we were initially concerned about the impact of COVID-related litigation early in the pandemic, we are now seeing generally favorable outcomes for insurers on many business interruption coverage rulings. It's also important to note that we continue to see companies that have successfully adapted during COVID, whether it be through technology, innovation, or product design. The adoption of firm underwriting objectives and strengthening risk management strategies have helped mitigate risk for the segment. For these reasons, we have revised the outlook to stable from negative. In the near to midterm, we do expect some headwinds for the segment. These include rising inflation, the extent to which is being driven by short-term factors such as pandemic-related supply chain disruptions remains unclear, though, and the somewhat uneven nature of the economic recovery given the elevated number of open positions in certain service occupations. Social inflation, which was a pre-pandemic issue, and elevated loss costs driven by higher costs to repair and replace damaged property is also something we'll be watching. And while we are seeing favorable rate increases and actions, is it enough to align pricing with loss costs? Lastly, we may see continued pandemic-related legislative action, regulatory action, as well as judicial actions that could affect the ultimate cost of claims in the line, particularly for workers' compensation. And while these challenges may cause variability in performance of different lines within the commercial segment, the stable outlook reflects our expectation that overall the segment will remain profitable and continue to contribute to risk-adjusted capital strength, reflecting the resilience of companies in the marketplace.